In the first week of September 66, the City of London ceased to exist as a physical object. 4/5 of the buildings inside the Roman walls burned. The cathedral burned. The Royal Exchange, the Customs House, the halls of 44 livery companies, the prisons, the gates, 87 parish churches, and something in the order of 13,000 houses burned. And when it was over, and the ash had cooled enough to walk on, London confronted a question that no institution in England had any means of answering. Who pays? Not who is to blame. That question was answered quickly and badly, with a false confession and an execution. The other question: 13,000 houses had been standing on Saturday and were gone on Thursday. Somebody had owned each of them. Somebody had held a lease on most of them. Somebody had stock in the cellars and debts secured on the freeholds, and a business that had been in the same building for 3 generations. All of that had converted in 100 hours into a rectangle of hot rubble with a boundary nobody could locate. There was no mechanism for any of it. Not a bad mechanism, none. This is the story of what England built in the space where that mechanism should have been, and of how a catastrophe with no insurance produced, within 14 years, the first fire insurance company in the world, the first risk-based premium schedule, the first private fire brigades, and a way of thinking about property that the rest of the world eventually copied. It began in a baker's house on Pudding Lane in the small hours of Sunday the 2nd of September, in a summer so dry that the ponds had failed and the timber of the city had been baking for months. Thomas Bloodworth was the Lord Mayor of London and was woken and brought to look at it. The fire was, at that point, one house and a bit of a neighbouring one. The remedy available in 1606 was demolition. Pull down the buildings in the fire's path, make a gap it cannot cross, and let it burn out against the space. Every parish kept the equipment for it: long fire hooks on poles, ladders, leather buckets, a hand-pumped engine of limited use. It is worth understanding what the city was made of, because the fire was not bad luck, so much as an actuarial certainty waiting for a dry August. Inside the walls, perhaps 80,000 people lived in a dense mass of timber-framed houses, many of them jettied, each upper story projecting out over the one below so that buildings facing each other across a lane could nearly touch at the top. The ground floors held shops and workshops. The cellars held whatever the trade required, which in a port city meant pitch, oil, spirits, and coal. None of this was a secret. Successive monarchs had issued proclamations requiring new building in brick and forbidding the projecting stories, and those proclamations had been comprehensively ignored because enforcement fell to the same parish and city authorities whose members were the landlords doing the building. A rule that costs money to obey and nothing to break is not a rule. It is a statement of preference. And the city had just come through the worst year in its history for an entirely different reason. The plague of 1665 had killed something approaching a fifth of London's population. The survivors had spent a year burying neighbours. When the fire came, it came to a place already exhausted, with a depleted population and a disrupted administration. Institutions rarely fail in isolation. The problem was legal rather than technical. Pulling down a house destroyed somebody's property, and the person who ordered it could be sued for the value. The authority to do it without that risk sat with the Lord Mayor, and the Lord Mayor did not want to use it. Samuel Pepys recorded what the Lord Mayor said, and it has followed the man for 3.5 centuries. Pish! A woman might piss it out. Bloodworth went back to bed. Within a few hours, the fire had reached the riverside warehouses, where the pitch and tar and oil and coal and brandy of a port city was stored, and after that, no quantity of demolition would have made any difference at all. Samuel Pepys was a senior administrator of the Navy, and the reason we know as much as we do is that he spent the week walking around, writing down what he saw and using his position to get things done. It was Pepys who went by boat to Whitehall to tell the king that nothing would serve but pulling houses down, and who came back with the royal authority to do it. By then, the wind was doing the arithmetic. The fire burned for 4 days, driven west and north by a strong easterly jumping streets following the ground. It stopped where the buildings ran out and where, finally, the demolitions got ahead of it. And because the wind dropped, which is the part no institution can claim credit for, 6 deaths were recorded in the official count. That figure has never been believed by anybody who has looked at it closely. A poor person burned in a collapsing tenement generated no record, and the temperatures involved in the warehouse districts left very little to find. The honest position is that nobody knows, and that the low official number tells you more about the record-keeping of 66 than about the fire. The question of blame was settled with indecent speed and no evidence at all. A French watchmaker named Robert Hubert, picked up in the aftermath, confessed to having started the fire deliberately. His account was incoherent and changed repeatedly. He described a building he could not have reached and a method that did not match the site. It later emerged that he had not even been in the country when the fire began. He was hanged at Tyburn in October, and the parliamentary inquiry that followed concluded that the fire had been an accident. That verdict did not survive politics. 15 years later, at the height of the anti-Catholic panic, an inscription was added to the monument, blaming the fire on what it called the Popish frenzy which wrought such horrors, and it stayed carved into the stone for a century and a half before it was finally cut away in 1830. A city that knew perfectly well its fire had begun in a bakery in a drought spent 6 generations, telling itself otherwise in public. It is worth naming that pattern because it recurs in every disaster this channel covers. The financial reckoning and the political reckoning run on separate tracks and at different speeds. The political one is fast, cheap, and satisfying, and it produces a culprit. The financial one is slow, expensive, and produces institutions. Only the second one ever prevents a repeat. Something in the order of 13,000 houses were destroyed, along with the halls of the great trading companies and the commercial heart of the kingdom. 87 parish churches went with them, and Old St. Paul's, where the lead of the roof ran down the streets in a stream and the stone exploded in the heat. Roughly 4/5 of the people inside the walls lost their homes. They went out into the fields of Moorfields and Islington and camped there, tens of thousands of them, in the tents and shelters that the king ordered brought out from the naval stores. A population the size of a large provincial city, sitting in a field outside the wall of the one they had left. Now the question that nobody in London could answer. The losses were put at around £10 million. It is worth understanding how large that number was rather than simply reading it. The city corporation's ordinary annual income was in the low tens of thousands. The Crown's entire yearly revenue, in a good year and with taxes voted, was of the order of 1 to 2 million. So, the fire destroyed, in 4 days, something between 5 and 10 times the annual income of the entire English state. and it destroyed it in a specific and awkward way. This was not a war loss where the state pays because the state fought. It was not a harvest failure where the loss is spread across everyone as higher prices. It was 13,000 separate private catastrophes, each one total, each one landing on a particular family with no relationship to their prudence, their trade, or their means. The instruments that existed could not touch it. Marine insurance was already a mature business in London. Merchants had been underwriting voyages for generations at Lloyd's Coffee House shortly afterwards and in the Royal Exchange before that. But marine insurance covered a defined venture for a defined period on a moving object, and its whole logic rested on the fact that ships sank one at a time, independently, in different oceans. That independence is the hinge of the entire subject, and it is why fire had never been insured. Ships in different seas do not sink together. Houses in a timber city do not burn separately. The event that destroys one is precisely the event that destroys its neighbors, and an underwriter who had written policies across a London parish in 1665 would have been ruined in a single night in 1666. There is a second reason nobody had insured a house before, and it is intellectual rather than structural. The mathematics did not exist. The idea that a large number of independent, uncertain events produces a stable and predictable average was, in 1666, brand new and barely written down. John Grount had published his observations on the London bills of mortality only 4 years earlier, the first serious attempt anywhere to draw statistical regularities out of records of births and deaths. And Edmund Halley's mortality table, the foundation of life assurance pricing, was nearly 30 years in the future. So the first fire insurers were operating without the tool that makes insurance a science. They had no loss frequencies, no exposure data, and no way to calculate a fair premium. What they had instead was a builder's judgment about which houses burn, which is not nothing, and a willingness to find out by trading. The mathematics arrived afterwards and explained why the business had worked. Correlated risk is uninsurable by the ordinary method. That is the technical problem the 17th century had to solve, and it did not solve it with mathematics. It solved it with bricks. Parliament answered with the Rebuilding Act, passed early in 1667, and it is one of the most consequential pieces of English legislation that almost nobody has heard of. No house to be built other than of brick or stone. Overhanging upper stories, the jetties that had brought the buildings on opposite sides of a lane to within touching distance at roof level, were abolished. Streets were widened and graded into classes with a number of stories fixed by which class of street a house stood on. That last provision is the modern part. The Act did not describe individual buildings. It defined 4 standard house types and assigned them to street categories, specifying wall thicknesses and timber scantlings for each. It is, in effect, a building code, and it was enforced by surveyors appointed to inspect and certify. A city that had burned because of what it was made of was legislated into being made of something else. The 4 standard house types are the ancestor of something you can still see from any train into London. A code that specifies stories by street class, wall thicknesses by house type, and uniform frontages produces repetition. And repetition, built speculatively and runs by developers pricing off a known specification, produces the terrace. The Georgian street is not primarily an aesthetic movement. It is what happens when a building code, a fire risk, and a speculative builder appointed at the same plot of land for 150 years. The court that sat in Clifford's Inn is the forgotten institution of the whole affair, and in purely economic terms, it may be the most important thing anybody did. The problem it was built to solve was this. A typical city property had a freeholder, a leaseholder, and often a subtenant, with a lease running for years or decades and rent payable throughout. The building was gone. The lease was not. A lease is a contract on land, and the land was still there under the rubble. So the tenant owed rent on a heap of ash and had no building to trade from and could not afford to rebuild something he did not own outright. The landlord had no incentive to rebuild either, because the tenant held the term. Multiply that by 13,000, and the city cannot be rebuilt at all. Every site is frozen by a dispute in which both parties are behaving perfectly rationally. The fire court was created to break every one of those deadlocks, and it was given an extraordinary instruction to do justice between the parties as it saw fit, without regard to the strict letter of the contracts. Judges of the senior courts sat without fees. They heard cases in days rather than years. They apportioned the cost of rebuilding between landlord and tenant, extended or shortened leases as compensation, abated rents, and issued a decree that bound everybody. It worked because it was fast and because it was final. A system that had produced perfectly correct answers 3 years later would have produced a permanently empty city. The fire court is the clearest early demonstration of a principle that recurs through this channel's subject matter. In a crisis, the speed of the resolution mechanism matters more than its elegance. Christopher Wren submitted a plan within days, a rational city of piazzas and radiating avenues, and the other surveyors submitted theirs, and every one of them was quietly abandoned. Not because of taste, because of title. Redrawing the streets meant taking land from thousands of freeholders who had just lost everything, and there was neither the money to compensate them nor the appetite to try. London was rebuilt on its medieval plot boundaries, in brick to a modern code. The lanes are still where they were. The money came from a tax that is a small masterpiece of fiscal design. A tax of 1 shilling on every ton of coal coming into the port of London, later raised, hypothecated to the rebuilding of the churches, St. Paul's, and the public works. Look at what that does. Coal arrived by sea in enormous, easily counted quantities at a small number of wharves from a single trade with established customs machinery. It was almost impossible to evade and cheat to collect. It fell on consumption within London itself, so the people paying were the people benefiting. And it was invisible in the way an efficient tax generally is, a fraction of a penny on the price of a household's winter fuel, paid a shovelful at a time over decades until the cathedral was finished. The duty paid for more than the cathedral. Of the 87 parish churches lost, 51 were rebuilt under Wren's office, each one a separate commission on a cramped medieval plot, which is why the city churches are such a catalogue of ingenious solutions to awkward corners. It paid for the quays and the widening of streets, and it paid for the monument itself, the fluted Doric column that Wren and Robert Hooke put up near the northern end of London Bridge, 202 feet high, standing at what was said to be exactly 202 feet from the house in Pudding Lane where it started. That is a very 17th century way of commemorating something, not a statue of a person, but a measured distance rendered as a vertical object, with a staircase inside so that anybody who has climbed it has physically traversed the fire's own starting radius. It was also, in its original conception, an astronomical instrument. Hooke intended the shaft as a zenith telescope, which is a fair summary of what that generation was like. St. Paul's was, in a real sense, built by everybody in London who ever bought a sack of coal. That is public finance of a quality the 18th century would struggle to match. Which brings us to the man who turned the problem into a product. Nicholas Barbon was a physician who never practiced, the son of a fifth monarchist preacher with one of the most memorable names in English history, and by temperament the purest speculative developer this country has produced. He bought burned land and land beyond the walls. He built on it fast and cheaply, and he fought a long war with the Inns of Court and with anybody else who objected to what he was doing to their gardens. He was sued constantly. He was, by every contemporary account, entirely unbothered by it. He also wrote economics, and the writing is what makes him interesting rather than merely energetic. His pamphlets argue that consumption and desire drive wealth, that a nation grows rich by trade and building rather than by hoarding, and that credit multiplies the useful capacity of money. He was arguing this in the 1670s and 1680s, which puts him a very long way in front of the general opinion of his time. Around 1680, he opened an office to insure houses against fire, and it is generally recognized as the first of its kind anywhere. It is usually called the Fire Office. He was characteristically in it for the money. A builder who insured houses was a builder with a second income stream from the same customers, and after a fire, he was well placed to win the rebuilding work. But look at the structure of what he sold, because it is genuinely new. The policy was written on the house rather than on the person. It ran for a term of years, and it was priced by the annual rental value of the property, which was a workable proxy for what the building was worth and what it would cost to replace. The customer paid a premium at the start, and in the mutual versions that followed, could be called on for more if the losses of the year exceeded the fund. And then the crucial move. A brick house was charged half the rate of a timber one. That is the sentence that matters. Not a flat rate for all houses, and not a rate haggled case by case, but a published schedule in which a physical property of the building changed the price. It is risk-based pricing, and it appears here in a London still visibly scorched, decades before anybody had the mathematics to justify it. The early offices also did something that modern insurers do not, and it tells you where the idea came from. Rather than paying a sum of money, they could undertake to rebuild the house. That is insurance in kind, and for a proprietor who was already the largest speculative builder in London, it was an efficient promise to make. He was settling claims with his own labour, his own bricks, and his own margin. It also solved a problem the customer had, which was that a cash payment after a fire buys building work in a market where every one of your neighbours is trying to buy building work on the same morning. The city corporation noticed the profits and tried to take the business municipally. In the early 1680s, it proposed its own fire insurance scheme, run by the city for the benefit of the city, and Barbon fought it, publicly, aggressively, and successfully, cutting his rates and pointing out that a corporation which had recently proved unable to organize a fire was an odd choice of underwriter. It is the first argument in England about whether catastrophe cover should be a public utility or a private trade, and it happened within 4 years of the industry existing at all. The effect of that price differential is the thing worth carrying away from this whole story. It made safety cheaper. A man deciding how to build now faced a permanent annual saving for choosing brick, on top of a statutory requirement to do so. The insurance industry and the building code were pushing in the same direction, and one of them was pushing with money every single year, which is the more reliable of the two. That is also, incidentally, the answer to the correlated risk problem. Fire insurance became possible in London because London stopped being the kind of city where one fire takes a whole ward. The product did not defeat the correlation. The Rebuilding Act did, and the product then priced what was left and then paid people to reduce it further. The fire marks are the part everybody remembers, and they are usually explained wrongly. An insured house carried a metal plate on its front wall bearing the badge of the company and, often, the policy number. The standard telling is that the company brigades would arrive at a fire, look for the mark, and ride away if it belonged to a competitor, leaving the house to burn. It is a wonderful story about the cruelty of private provision, and it is largely a myth. The marks did serve identification, and there was certainly rivalry, and there are recorded instances of brigades behaving badly. But the companies worked out very quickly that a fire in an uninsured house becomes a fire in an insured one within about 20 minutes, because fire does not read policy numbers. Within a few decades, the offices were paying each other for attendance at one another's fires, sharing engines, and eventually operating jointly. The brigades themselves were a real institution and a genuinely strange one. The insurance companies employed watermen as firemen, chosen because they were strong, used to working with ropes and pumps, and available between tides, dressed them in company livery, and kept engines at company stations. For roughly 180 years, the fire service of the largest city in the world was a byproduct of the insurance market. Nobody designed that. It emerged because the party with the financial interest in a building not burning was the party willing to pay for the equipment. The Sun Fire Office opened in 1710 and became the largest of them, and the model spread outward from London through the 18th century to Bristol and Edinburgh, and then across the Atlantic, where a Philadelphia Mutual founded on the London pattern in 1752 still exists today. The hand-in-hand, founded in the 1690s, showed the other structure, a mutual society owned by its policyholders who shared the losses among themselves rather than paying a proprietor for the privilege of being covered. Those two forms, the proprietary company and the mutual, were both operating in London within 30 years of the fire, and the insurance industry has argued about which of them is better ever since. Barban himself did not end well, and the manner of it is entirely in character. He had built enormously, borrowed enormously, and litigated continuously, and when he died in 1698, he left instructions in his will that none of his debt should be paid. It is one of the more remarkable sentences in English probate. The man who invented the business of guaranteeing other people against loss spent his own life shifting loss onto everybody who dealt with him and arranged to keep doing it after his death. That is not a moral footnote so much as a structural observation. The early insurance offices were unregulated, uncapitalized in any modern sense, and dependent entirely on the solvency and honesty of their proprietors. There was no reserve requirement, no supervision, and no guarantee fund. A policy was worth exactly as much as the man who had signed it, which is why the mutual form, where the policyholders were the company and could be called on for more, spread as quickly as it did. Within a century, the insured value of London had become a number that somebody could look up. That is a quieter revolution than it sounds. A city's building stock had been converted from an unmeasured accumulation of stone and timber into a schedule of valuations held in ledgers, updated annually, backed by contracts enforceable at law. And once a building has a written, contractual value that survives its destruction, it becomes better collateral. A lender advancing money against a house in 1650 was lending against something that could vanish overnight with no residue. The same lender in 1750 was lending against a house plus a policy. That is a reduction in the cost of borrowing across the entire property stock of the country, achieved without anybody legislating it. It took another century and a half and a second disaster before the state took the fire service back. The insurance brigades had been consolidated in 1833 into a single London fire engine establishment, funded by the companies and run as one force. It was, for its time, extremely good. But it was still a private body, paid for by insurers, protecting a city whose growth had long outrun the parish boundaries it had been built around, and its funding depended on the willingness of proprietors to spend money on public safety. James Braidwood had built the first professional brigade in Edinburgh before coming south to run the London establishment, and he is the founder of British firefighting as a trained discipline rather than a trade. He wrote the manuals. He insisted on drill, on entering buildings rather than pouring water at them from the street, and on understanding how a building was constructed before you fought a fire inside it. He was killed in June 1861 at Tooley Street on the South Bank in a warehouse fire in exactly the kind of riverside district that had beaten the city in 1666, tar, oil, tallow, and cotton stacked in bulk beside the water. A wall came down on him. The fire burned for 2 weeks. The commercial consequence was immediate and is the reason the change actually happened. Tooley Street cost the insurers an enormous sum, and their response was to raise warehouse rates sharply and to say publicly what they had been thinking privately for years, that the risk in the riverside districts had grown beyond what a private body funded by premiums could reasonably carry, and that protecting a metropolis was not a service their shareholders should be paying for. That is the moment the argument Bourbon won in the 1680s finally reversed. Fire protection had been private for as long as the private party made money from it. The instant the arithmetic turned, the industry itself became the loudest advocate for a publicly funded brigade, which is worth remembering whenever anybody describes the boundary between public and private provision as a matter of principle. It has usually been a matter of who is currently bearing the tale. The insurance brigades were finally handed over in 1865 when Parliament created a publicly funded Metropolitan Fire Brigade. The companies had made the argument themselves. They were insurers, not a public service, and the protection of a city was not a thing that should depend on the commercial calculations of proprietors. It had taken 185 years and the death of the most respected fireman in the country to settle a question the Great Fire had raised in its first hours. Step back from the sequence, and the shape of it is unusually clear. A catastrophe arrives that no existing instrument can absorb. The immediate response is legal and administrative rather than financial. A court to unfreeze the contracts, a statute to change what buildings are made of, a tax to pay for the public parts. Only after those are in place does a private market become possible at all, because only then is the risk uncorrelated enough to price. Then the market does the thing. Markets do well. It turns a physical property of a building into a price, and the price does more to change behavior than the statute did, because the price is paid annually and the statute is only enforced once. And finally, after the market has run the resulting service for the better part of 2 centuries, the service is recognized as a public good and taken into public hands. None of it was planned. There was no committee in '67 that set out to build an insurance industry. There was a burned city, 13,000 ruined households, and a set of separate people solving the particular problems in front of them. There is one more thread worth following, because it explains why this particular English innovation traveled so well. Fire insurance is unusually portable. It requires no colonial administration, no treaty, and no capital stock beyond a subscription list. It requires only a legal system that will enforce a contract and a city dense enough to make the risk worth transferring. So it moved along exactly the routes British commerce moved along. First to the provincial English towns, then to Scotland and Ireland, then to the American colonies, and then wherever a port had a merchant community and a courthouse. What traveled with it was not just a product, but a survey. To price a policy, you must inspect the building, classify its construction, note what is stored in it and what stands next door. The office is therefore built up, over decades, the most detailed private description of the physical fabric of British cities that anybody possessed, street by street, trade by trade, trade by trade. Those registers are now among the best sources historians have for what these places actually contained, which is a nice illustration of a general rule. The records generated by people trying to price something are almost always better than the records generated by people trying to describe it. It is worth being clear about what fire insurance did not do, because the temptation with a story like this is to make the instrument the hero. It did not stop London burning. There were serious fires throughout the following centuries, and the docks and warehouses remained the weak point for as long as they existed. It did not compensate the poor, who did not hold policies and whose losses in '66 and afterwards were absorbed by nobody. And it did not make anybody safe in the way a modern person expects. A policy pays for a building and the payment arrives after the loss, which is a very different thing from prevention. What it did was narrower and more durable. It made a specific class of catastrophic loss survivable for the people who could afford the premium. It made property lendable, and it created an institution with a standing financial interest in fires not happening, which is why the fire engine and the trained fireman and the building survey all arrived under an insurer's badge rather than a magistrate's. And it created a problem that has never gone away, which is the one this channel keeps arriving at from different directions. Insurance works by pooling risks that are independent of one another. The moment the risks stop being independent, because the houses are all in one street, or the mortgages are all on one kind of borrower, or the counterparties are all insuring each other, the pool stops being a pool and becomes a single bet with a lot of signatures on it. London solved that in 1667 by physically changing the buildings, which is the only genuinely reliable method. Reduce the correlation in the world rather than in the model. Every subsequent generation has been tempted to solve it in the model instead, and the results have been consistent. The last thing to say is about the shilling on the coal. Every element of the response to 1666 has a lesson attached, but the coal duty is the one that would be hardest to repeat now. A tax narrowly targeted, cheap to collect, falling on the beneficiaries, hypothecated to a visible object, and left running for as long as the object took to build. They finished St. Paul's in 1711, 45 years after the fire that made it necessary, and the dome went up over a city of brick that was insured, priced, and protected by men in livery who had been watermen the year before. None of that had existed when Thomas Bloodworth stood in Pudding Lane in the dark and decided the fire was not worth getting out of bed for.